Greetings and welcome to the Alpine 4 webinar. It is now my pleasure to introduce your host, Mr. Kent Wilson, CEO. Thank you, Mr. Wilson. You may begin.
Thank you very much. I also want to thank everybody who's joining us here today to allow me to present to you guys. I know that you're all busy, but hopefully you'll find this as informative as I hope you do. And I'll talk now a little bit about Alpine 4. Alpine 4 is an owner-operator of leading micro and small cap companies that hold defensible positions in their individual market. We typically choose to invest in businesses with revenue around $5 to $50 million because in this target-rich environment, they generally sell at more reasonable multiples, and they also present greater opportunities for operational and strategic improvements. And that has an impact on potential growth for us long term. Within this acquisition strategy, we have four main holding portfolio companies: A4 Construction Services, A4 Manufacturing, Inc., Alpine 4 Technologies, Inc., and Alpine 4 US, Inc. Within the A4 Construction Services portfolio, we currently have Moore Sheet Metal out of Indiana, Deluxe Sheet Metal also out of Indiana, and Excel Fabrication out of Twin Falls, Idaho. In the A4 Manufacturing, we have Quality Circuit Assembly and American Precision Fabricators. And then in Alpine 4 Technologies, it currently holds our automotive technology company called Alpine and our blockchain-based SPECTRUMebos, which is we've coined it as a business operating system. We currently are developing and using Spectrum within our holdings to help us drive more relative information and streamline information. And really the goal is to help us operate the company more efficiently as we grow and add more subsidiaries into it. And then Alpine, or A4 US, is essentially a catch-all for companies that don't fit within those three major categories, but they have to have synergistic relevance. A supplier or some kind of synergistic relevant company that may provide value or a competitive advantage to one of the other companies within the construction services, manufacturing, or technology holding company. I'll move on to slide 3. One of the things that I'm regularly asked is, what is your business model? Are you just out acquiring any business? And that frankly is simply not the case. As a turnaround consultant for many, many years, I was in over 60 businesses over about an 8-year period. And what I figured out during that time was businesses that have a spirit of innovation, but also are well diversified in either their product offering or other sister related companies tend to be generational. And so we set the foundation of Alpine 4 up to acquire businesses in one of three categories. You're either a driver company, a stabilizer company, or a facilitator company. A driver company is really a company that is cutting edge, has large potential value for our shareholders to experience explosive growth or some kind of leading technology or a competitive business process that has, frankly, large market potential. It's something that I think long-term gives us a unique value opportunity when you're looking at the Alpine 4 stock price and saying, hey, here's what it is today, but we know we're working on these type of companies right here, and I can extrapolate that the price might be X in the future. And so a driver company is really designed to be a company that is out there in the front lines of things, delivering potential huge value in the future. A stabilizer company is your quintessential private equity buy. It's a company that's been around a long time, consistent revenue, has very sticky customers, and solid net profits. And frankly, is needed when we're nurturing a driver company to its full capacity, if you will, and potential. And then the secret sauce to what we do is the facilitator role. And Quality Circuit Assembly and APF, American Precision Fabricators, are both facilitators. And what a facilitator does is it allows it's product or services to create a competitive advantage around one of our other companies. And for example, and I'll use this as an example, in this case, TCA is a stabilizer, but they have a fairly large customer that they do, and I would say, one of the most cutting-edge customers in automotive design and electric cars. And what I can tell you around that is we do the circuit boards and some of the wiring harnesses for that company. Well, everybody in San Jose, California, Silicon Valley wants those prototyping and low-volume production work because, A, it's a large, reputable firm or company, but it also provides consistent, revenue for them, and it's frankly put them in a class where some of the competitors aren't. To create a competitive advantage around that customer and our product services, we brought our sister company, American Precision Fabricators, in to do some of the precision sheet metal that was going into some of the box builds that we were doing for that customer. Well, what has it done? It has allowed us, through our Spectrum ERP and blockchain system, to create one harmonious ERP, quality assurance platform, and management system to create a product or service that none of the competitors in San Jose can do. So we basically created a barrier around that customer by offering a product or service of a sister company in that portfolio. So that's what DSF is. It's driver, stabilizer, facilitator. I think it's frankly fairly revolutionary when you think about the thought process of it. And it's all based around being synergistic, innovative, and driving excellence within the Alpine 4 business model. So moving on to the next slide. What is our vision? We have a model called SIDE, Synergistic Innovation Drives Excellence. Synergy, Innovation, Drive, and Excellence. It is our goal to drive Alpine 4 into a leading, multifaceted holding company with diverse subsidiaries that not only benefit from each other as a whole, we talked about the synergy side just now with QCA and APF, but also have the benefit of independence. I really believe that innovation is derived from independence, where you can create a little bit of a competitive advantage or a competitive also drive within our subsidiaries to be better than one another, but also do it in a holistic nature. And so diversification is the key. We're driving ourselves to buy other companies that fit in our categories, but we found from that we are creating large amounts of innovation, and I think we're disrupting our current market space by the way we think about and work together. Also, innovation is in our culture. When we buy a company, they may be used to doing something one way. In fact, I have an old saying. It says, "Profit covers a multitude of sins." And in our standpoint, we look at businesses that may be used to doing something one way, but through our motto of SIDE, our division leaders get together pretty often, or subsidiary leaders, I should say, get together pretty often and discuss relative problems within their industry. I cannot tell you how many times that we found a solution to the actual issue at hand within one of our subsidiaries by looking to another industry. And it's allowed us to be, frankly, unique within our market space and provide value. And frankly, some of our competitors, I know, are seeking our advice on how to be better. And so that's something that I think, from an innovation standpoint, is built into our DNA, and we bring that into every subsidiary we buy. I'll move on to my next slide. So what do we look for in our acquisitions? This is a question I commonly get. And it really comes down to 4 major components. The first one is it's got to have some synergistic relevance to our DSF model. We're not out just buying every company out there. And there are a lot of them out there. But we want it to see, is it a fit in the DSF model? And then is there any synergy between some of the current subsidiaries? And if it's not, what is some of the synergistic relevance that can come from the future by having that company? We like to see a lot of low-hanging fruit. As a turnaround guy, I'm pretty good at looking for the low-hanging fruit within a business. And we really want to say, when we go through the due diligence process, what are the things that the old ownership kind of overlooked, A, because they were making money and they didn't want to deal with it, or they weren't aware of the issues or the efficiencies that can be gained. And so we like to see that it has low-hanging fruit that we can pick up immediately. Value is probably the number one thing we look at, even though it's item number 3. Value is something that I think we've been pretty good at. In fact, even on our last 2 acquisitions, we've had what we call a bargain basement gain in value, meaning that the assets exceeded the value that we paid for the company. And that doesn't mean that we're low buyers. We like to be fair buyers, but we want to have a definitive value that isn't stretched in either way. And so we look to buy businesses that, frankly, the owner isn't having delusions of grandeur on what it's worth, and we won't compete if it is for that because we're value buyers. And then finally, anytime that I'm looking at a business, I need to know that that business can grow to $25 million in revenue or more without having to invest major capital in a CapEx expense to get them there. And what that does is that gives us the internal benchmark to say, hey, we're over the next 3, 5, 7 years, we want to grow, a $5 million company into a $25 million company. In some cases, that isn't based in reality without putting in a new production plant or buying $2 million worth of equipment. We like to see that each of our subsidiaries can grow there with relative ease with the current structure that they have. And so that gets back into the buying and the value side of things, but it's very important to me to know that they can get there. So we're moving on to slide 6. This is a common question I get, and I hope this is encouraging to the people listening to this. When you look at Alpine 4, we really are the essence of what I would call Americana. We are buying American businesses in the construction services industry, the manufacturing, tech, and some of the ancillary related businesses that support those. When you look at the true market size of that, the macro level is 10.4 trillion when you combine them all together. The median, the small kind of what I would say small cap market, which brings companies that are in the $5 to $50 million range, is about $199 billion. And then when we focus it down to our core, what we're really looking at for businesses that we can go out and acquire and their revenue, there is $11.4 billion that we've identified as real, substantive, that are that we can drive to. And I really believe we can be a company that grabs about 20% of that without too much effort over the next 5 to 10 years. So really, what is Alpine 4 going to become? I think we could easily be a $3 billion company over the next, maybe $4 billion company over the next 5 to 10 years. So moving on to slide 7. Let's talk about where we're at today. And so if you look at where we're at today, Q1, we recorded some decent growth. We did about 7.3 to 4 million in Q1 of 2019, and we grew to 8.9 million. Q2, we're trending to be about 8.8. We did about 7 million in Q2 of 2019. So if you look at Q3, we're estimating right about 9 million. And that's even in light of COVID and what's going on. We've embraced the reality of COVID and are doing the things necessary to be innovative and move beyond it, if you will. And I think our numbers, when you reflect what is truly going on in the economy, it's quite remarkable what we've been able to do. And then in Q4, we're showing about 10.5 million. That would be with the addition of one of the acquisitions that we're currently doing diligence on, and would bring us, to about some pretty substantial growth in Q4. So I'll move on to the next slide. One of the investment points, I regularly talk about value, but if you really look at Alpine 4 today and our stock price, I think it's trading between 6 and 7 cents. The market cap that we are at today reflects really the price, or is less than the price that we paid for Deluxe Sheet Metal, just one of those subsidiaries. And if you add all the other subsidiaries in, the intrinsic value on some of our patents, the future value of the blockchain system of Spectrum, we are grossly undervalued. And I think as far as investors that are looking at the micro space as a plausible market they like to invest in. I challenge you to find another business more suitable and real than Alpine 4 Technologies. And so what I'm getting at is our market cap trades less than what we paid for just one business, which was Deluxe Sheet Metal. Growth, Alpine 4 is a growth company. Even in COVID with, if you took the baseline of our revenue and our companies last year, we're down a little bit. But because we're actually adding new subsidiaries, our revenue combined is growing at 20% annually. And we'll do that for the foreseeable future. We're also a solution-based company. One of the things I learned again in turnaround days was a company of innovation is a company that is solving problems, is a company that is generational. So the investment points that I'd like to really portray to potential investors are the value is there. There's opportunity for our stock price to grow dramatically. We are a growth company, which I think facilitates that stock value. And then we're a solution-based company. We're looking to solve problems. We've solved many of our industry problems already internally with Alpine 4. So those are some of the investment points. All right, moving on to slide 9. A little bit about our history. Founded in 2014, I was brought on by the board of directors of a company called Autotech that really became the founding technology that has moved into our Altia subsidiary, connected car, and mainly was designed around the connected car product. And then in 2016 and 17, we made our first real acquisition, what I call, which was Quality Circuit Assembly, and we completed our S4 registration statement with the SEC. We started trading in January, I think 11th was the official date for first trading, was 2017. Since then, we've acquired in 2018-19, we went on a pretty rapid acquisition strategy. We acquired 3 companies: American Precision Fabricators, Morse Sheet Metal, and Deluxe Sheet Metal. And we began building out in early 2018, it's actually at the end of 2017, but started building out our blockchain-based ERP SPECTRUMebos. And then in 2020, again, we've continuing on with our acquisition strategy. We acquired Excel Fabrication on February 21st, and we're currently in DD to, we're actually now up to 3 companies we're doing DD on, and it's, I think we'll grab one more of those by the end of the year. So here's a little bit about myself and my team. I'm Kent Wilson, the CEO. Jeff Hale is my Chief Operating Officer. Shannon Rigney is our VP of Social Media. Ian Kanchowitz, our Vice President of Investor Relations. We have Tabitha Jones, our VP of Accounting. And we recently added, in early May, Larry Vick, our VP and Corporate Controller. Unfortunately, he did not have his picture up yet. We thought about putting a picture of the Invisible Man in there, but we will just avoid that humor for today. With that, I will take some questions. It looks like I do have a few questions. So I'll pop over to that real quick and see what's. Okay, so in your last shareholder, I'll read the question now. In your last shareholder update, you mentioned the ability of Deluxe to expand service offerings into various areas, such as testing and balance. Can you discuss the near and medium-term revenue opportunity in those areas? Will the addition of those services improve gross margin? If so, can you give us an estimate of positive impact to gross margin? Kartik, I want to say thank you very much. That's an excellent question. Yeah, we are looking in the sheet metal industry. There are certain what I would call add-ons that provide a lot of value. Deluxe Sheet Metal is in an amazing facility in South Bend, Indiana. Has the opportunity to grow quite dramatically in that market. And we think the competitive advantage that we need to give them is to move into some of the ancillary services offerings. So we have the room to do those services within our current facility structure. It gets back to the value side of things. And we think, that just the test and balancing side of things and some of the air handling engineering that can go on can easily double the size of revenue of Deluxe, currently. Deluxe is down a little bit this year over last year, but trending about $9 million for 2019. well, they should trend about 8.5 to 9 million for 2020. You could add easily another over the next 2 to 3 years, another $7 to $9 million in revenue from the test and balancing side of things. As far as gross profit is concerned, as far as margin goes, sheet metal is fairly low margin. We strive to hit around the 20% range, and there are some restriction factors there, such as the union and material handling things. But when you're providing a service, we estimate that will bring our gross margin in a blended view up about 8%. So yes, the short answer is yes, we're looking at doing those things. We think it will add about $7 to $8 million in revenue, over the next 2 to 3 years, and at least in that geographic market, and that doesn't include expansion beyond that. And then, revenue, gross profit margin could increase to as high as 28%. So with that, I don't have any other questions right now, and I want to say thank you. And if there's anything else that I am conducting one-on-one meetings, I'm more than happy to meet with any of you. Thank you very much.
This concludes today's webinar. You may disconnect your lines at this time. Thank you for your participation. Have a great day.